Most people think you need a lot of money to start investing. You don't. If I had to completely start over from scratch today with $1,000, this is how I would start. No hype, no day trading, just a simple plan anybody can copy in under 10 minutes to build long-term wealth. Whether this is the first time you're watching one of my videos or the 10th time, there is one message I want to always get across. You should never feel ashamed about how much you can invest. The best thing you can do is just start. I know how it feels. You see people posting their massive portfolios online and you feel like you're behind. You're not. Everybody starts somewhere. That might mean investing $50 a week or just $5 a week. The only thing that matters is that you're building habits and discipline. As a college student myself, I don't have much money to invest with. So what I do is I invest what I can, whenever I can. The key is to stay consistent. It is never to stay perfect. Investing is a long-term game and you have to start somewhere. So here's exactly how I'd split that $1,000 into the market today. You should think of this like building a house. You need a strong foundation, a powerful engine for growth, and then a few personal touches to make it yours. I would start by putting $500 into VOO. This is an ETF, an exchange-traded fund that tracks the S&P 500, the 500 biggest companies in America. When you buy VOO, you're not betting on a single company or industry to perform well. You're buying the entire US economy. That includes everything from Apple and Microsoft to Johnson & Johnson, Coca-Cola, and JP Morgan. If just one of the 500 companies struggle, the other companies will help and pick it up. That's the power of the S&P 500, the diversification. You're protected by the collective strength of American businesses. Now here's why this matters. The S&P 500 has grown nearly 10% per year over the last century. This is through wars, recessions, and crashes. And if you let that 500 sit there and compound at 10% for 30 years, it becomes $8,700 without adding a single dollar to that 500. Now let's say you keep putting in $100 a month alongside your original 500, you'd be sitting at nearly $230,000 in 30 years, all from this one index fund. That's why I call VOO the foundation. It's not exciting day to day, but it's dependable. It's that kind of investment that quietly makes you rich slowly. Now the next buy is going to be $300 of QQQM. This is an ETF that tracks the Nasdaq 100. It's basically the top 100 non-financial tech companies. These are companies driving the next decade of innovation. These are companies like Nvidia, Amazon, Google, Tesla, Meta, and more. QQQM moves faster than VOO, both up and down. But that's the trade-off you get for higher growth. It's a little more risky, but you're investing in the companies that are shaping the future. These are companies heavily focusing on AI, cloud computing, software, and semiconductors. If you believe AI, automation, and data is where the world is heading, QQQM gives you the best exposure to that. Historically, the Nasdaq has grown about 12 to 13% annually, which is higher than the S&P 500, but it has come with more volatility. This is why I like pairing it with VOO. Think about it like this. VOO is a seatbelt that keeps you safe, and then QQQM is the accelerator that gets you ahead. Together, they strongly balance each other out. Now, one argument you'll hear people say is you don't need VOO and QQQM together because they track a lot of the same stocks, which is true. What they're missing though is that the overlap in the two ETFs are with the strongest companies. So a lot of the top holdings in VOO and a lot of top holdings in QQQM are stocks like Nvidia, Amazon, Google, Apple, these powerhouse companies. I view that much less as a flaw and more of a benefit. You're getting more exposure to the world's biggest and best companies. And then finally, for your last $200, this is going to be individual companies. This could be the fun part of your portfolio, but still treat it seriously. This is where you could express the conviction in companies you believe in. For myself, I would choose companies like Amazon, Google, ASML, Adobe, Nike, Duolingo. I heavily believe in all those companies for the future. Now I already have videos all across my channel for each of those companies and why I'm buying. But for this video, I'll give you a really brief summary for why I have each one. For Amazon, they have built one of the most efficient logistic networks in the world. And now they dominate cloud computing through AWS. Google practically owns the internet search economy, and now they're deeply investing with AI with Gemini and DeepMind. For ASML, they build the world's most important machines in all of AI. Without the machines they create, no company in the world would be able to make AI chips. For Adobe, they have massive pricing power in creative software and is reinventing its tools with AI. Nike owns global brand equity that few companies on earth can match. And then finally, Duolingo is growing much bigger than just a gamified learning app. With a combination of AI and data, they are creating the world's most personalized education system. The key with picking individual companies is not to gamble, it's to learn. Owning a few individual companies can teach you how businesses work, how earnings impact stock prices, and how the market reacts to change. And just one great long-term winner can outperform your ETFs by miles. And that's what I mean by conviction. Own companies you actually understand and believe will still be around in 10 years. If you're not yet sure what stock fits that, just put the rest at $200 in QQQM. And if you need help picking individual companies, I have videos on this channel going over the stocks I'm buying. You could also go to my Instagram or TikTok and see daily updates on what I'm doing. This portfolio is simple, scalable, and realistic. Whether you're investing the $1,000 we talked about, $100, or $100,000, the structure stays the same, only the dollar amount changes. Now, the real power isn't the first $1,000. It's what you do next. Consistency builds wealth. If you could add $100 a month on autopilot, you'll already be ahead of most people your age. Now, let's say you do set aside $100 a month and invest it. If you do that over the next 10 years, your $12,000 will have been turned into $19,000. If we take that to 20 years, your $24,000 will now be $68,000 invested. And then finally, you take that all the way back to 30 years. $36,000 invested will now be over $230K. All of that just from setting aside $100 a month and investing it monthly. You need to stay patient. The market rewards patience. You don't need to be checking the market every day. In the short term, the market goes up and down all the time. Over the long term, the market will continue to go up. Before I end this video, I want to give you a few more tips. These are some mistakes you should try to avoid making. The first mistake is avoid chasing hype. Usually when you see something trending, it's already too late. You don't need to go out and try to find the next Tesla. You need to stay consistently invested into world-class companies. You need to avoid panic selling on dips. Like I mentioned, the market in the short term can be crazy. You might see great companies drop 20 to 30%. When you zoom out and look at the big picture, the market continues to go up and companies continue to grow. Don't be fearful as dips. See them as opportunity to buy good companies at a discount. And then the last thing is avoid inconsistency. Starting strong doesn't matter if you stop in 6 months. The small, boring deposits create large winners in the future. If you avoid just these 3 mistakes, you'll be ahead of most investors. That's exactly how I would invest $1,000 in today's market. This portfolio was built to be simple, diversified, and focused on long-term growth. Like I said earlier, the best thing you could do is just start today. If you want to see a portfolio I built for my friend with $10,000, click this video on the screen. It might help you pick some of those individual companies we were talking about. And I'm gonna end this off by saying this was not financial advice. This is personally what I would do if I restarted with all the information I have now. And before picking any stocks, you should always do your own research. Again, thanks for watching, and if you like this video, I'd appreciate a thumbs up.